Wolfgang, thanks for joining us here at Forbes today. Glad you came by. Tell us a little bit about this yen week you were telling me about earlier.
Boy, I mean, if you're looking at all these companies that are getting impacted by this at the end of last quarter, significant weakening of the yen, that's really what this is about. You're starting to have a lot of companies coming out, especially this week, with lots of earnings coming out. They're doing a lot of business in Japan, and this yen weakening has taken quite a few people by surprise. Unfortunately, some people had the hopeful theory, and that hopeful didn't really dish out. So at the end of the day, they're getting significantly impacted. So you're seeing lots of companies that have very significant negative impacts from that. You know, and some companies it's more obvious than others. Apple had that problem too. Apple, wasn't as explicit about it, but 61% of their business being abroad, probably 20% of that being from Japan. 11% decrease in the yen in one quarter. That was impactful. Wasn't too good for Apple stock.
And Coach, another one that we were talking about earlier, that's a company that luxury brand, does a lot of business overseas, very popular in other parts of the world in addition to the US. And they said, the currency factor was a big one in their earnings.
Yeah, absolutely. Again, and it was surprising. A lot of analysts were actually surprised by this, which is a little surprising to me because they've had this problem in the past. They continue to get hurt by currencies, and they have other people in the industry that don't. So that's going to impact their share price more and more going forward because there's more and more companies who are managing this risk properly and are eliminating it versus not. Constant dollar guidance, which they still do, is pretty 1980s, quite frankly. It's not even 1990s anymore. They still talk about, listen, constant currency, we would have only had 2% loss, now we had 7% loss. It's 7% that they didn't make.
Right. And listen, constant currency is great to give you an idea of the shape of the business and how their business is growing, but at the end of the day, you can't pay shareholders dividends and you can't return capital to shareholders with money you didn't actually make, right?
Absolutely correct. It's exactly that. It's cash. This isn't about accounting. This is about actual cash in there. If you're selling something for 10,000 yen and you're getting $100, or 10,000 yen and you're getting $90, that's $10 you're not having. The $100 is rather immaterial. Like you said, it's an indication of the business, but it also is an indication about the lack of risk management, quite frankly.
And now what you guys do as a software as a service firm is you help companies get a look at their exposure. Talk to me about how can companies do this right?
It's tough. Let's just start. It is not an easy problem. The first problem is a lot of these companies, 100, 200, 300 currency pairs. This isn't all about dollar yen. This isn't all about dollar sterling. They do business inter countries. So they have all these exposures. They have different systems where they record it, general ledger systems, et cetera, et cetera. So you have to pull all that data together, aggregate that, then take it through a process where you actually make sure that's the right data, because it's not always booked right. So how do you actually get confidence in that? We help that through a data integrity process, and then actually say, what do I want to do? To what level do I want to manage that risk down to, and how do I want to look at the exposures? Some companies, more and more, I have to say, look at it from the top down. They want to look at a holistic, here's my portfolio of currencies for the whole company. And then they have other companies, they want to look at it, but then still let their individual industries or their individual countries manage it themselves, but at the top they still have an overview of it and therefore have an idea of what risk they're willing to take or not. So it's all about, first of all, aggregating that data, second of all, having the analytics to ensure that it's good data, and then third of all, having the analytics to be able to look at what is that data, and then getting to good decisions quickly.
Right. Now, last quarter, the yen weakening was a big factor. The euro's been strengthening of late too. But I want to go to a little bit different part of the world and talk about China for a second. That's a country a ton of companies do business in, whether it's they're selling things to China or they're doing their manufacturing there, they're moving things through China. You've been on the record, at least speaking with me about it, talking about the possibility of China widening their currency peg and maybe allowing for a little bit of appreciation or possibly depreciation in their currency. Give us a little bit of your forecast for what we can expect from China on a currency basis.
You have to see a widening, a significant widening. So with no widening, that means any company really has no volatility coming from China when it comes to currencies. They have to widen. If they don't widen this thing, it's like a pressure cooker. At some time it's going to blow, quite frankly. So they have to widen this thing. I'm actually quite convinced that with the new Secretary of Treasury appointment and him being very good financially and really understanding numbers, maybe not as much on the international side. He's going to have a pretty good conversation with China of how this needs to be happened and how we need to work together to make that work. I don't think Secretary Geithner did that as effectively as I think the new secretary will.